Welcome to this Friday edition of Inside India. I'm Sri Jegarajah. Let's take you across the headlines. India's earnings season is in full swing. Wipro bucking the disappointing streak in the IT services sector, posting a revenue beat as it saw an improvement in US spending. But a surge in bad loans weighing on Axis Bank, India's fourth largest private lender, posting an unexpected drop in quarterly profit. And US solar panel makers are calling for tariffs on imports from India, Indonesia and Laos, accusing them of dumping in the American market. Welcome to Inside India, everyone. Let's start by taking a look at the regional markets, and they are broadly on the incline after the S&P and the Nasdaq again closed at record highs yesterday. Strong economic data, stateside, robust corporate earnings offsetting the tariff concerns. And in terms of the individual stories here in the region, the Nikkei and the Japanese yen, they're lower after polls showed Prime Minister Ishiba's ruling coalition was at risk of losing elections on Sunday. I want to highlight the TAIEX and the benchmark in Taiwan up by more than 1%, and one of the leaders today, and that's largely due to TSMC rallying over 2% after reporting record quarterly profit on Thursday, and that is lifting the broader TAIEX. Back to India. As Indian negotiators wrap up another round of trade talks in Washington, US solar panel makers are turning up the heat. They're now pushing for tariffs on imports from India, Indonesia and Laos after already securing duties on Southeast Asian shipments. The Alliance for American Solar Manufacturing and Trade claims that these countries are flooding the market with cheap panels to undercut new US factories. After intense scrutiny over the pilot's actions in last month's deadly Air India crash, India's investigation body is hitting back at media reports. The AAIB says reports spotlighting the pilots are based on selective and unverified information. The investigating body also added that its final report will detail root causes and safety recommendations. The aircraft involved, a Boeing 787, was fitted with engines from GE Aerospace. Our US colleagues spoke with the GE Aerospace CEO overnight. Here's what he had to say about the Air India incident.
For me, being still relatively new to the industry, it was a moment to once again see how the industry comes together in these situations. The industry does not compete on safety. And for us, you mentioned flight deck, that's really our operating model that reminds all of us that our priorities start with safety, then quality, and only then do we talk about delivery and cost. SQDC always in that order, whether it be with respect to product safety and employee safety. So this is something that we do every day. These unfortunate situations are a reminder for us to double down, to look, to learn, but the GE Aerospace team is focused on safety as job one every day.
The Indian markets join us in about 40 minutes. Here's what Gift Nifty futures are indicating for the open, 25,190. So we are looking at a modest lift. And remember that Indian stocks did fall yesterday. IT services was a drag after Tech Mahindra missed quarterly revenue estimates. And then, of course, you can say this for the broader markets in the region, if not globally. Uncertainty over Fed Chair Jerome Powell's tenure and future continued to keep Indian investors on edge yesterday. Citi, by the way, also downgrading Indian equities to neutral from overweight, citing stretched valuations. Speaking of which, earnings season is in full swing in India with big names like Reliance and JSW Steel reporting today. We also got numbers from department store chain Shoppers Stop posting narrower losses in the first quarter. That's thanks to strong demand for luxury watches, perfumes and apparel, as affluent consumers keep spending on high-end brands. But while premium sales are up, the middle class in the cities are feeling the pinch. Divide is showing up in the macro data too, with urban India showing softer consumption trends, weaker auto sales and rising unemployment. Let's go deeper on India and the macro and the markets there and bring in Sabir Bhatia, co-founder of Hotmail.com, joins us on Inside India. Sabir, welcome to the programme. Let's start with the top-down view from your opinion. How would you characterise India's economic outlook and the balance of risks and opportunities?
Well, India is, I think, the greatest unrealized potential there is. It has a huge workforce. India needs to transform its economy from an asset-based economy to really an IP-based economy. And if it can do that in the next 10 years, then I think it's clear blue skies for India. However, to get there, there are a lot of steps that it has to take. And, primarily it has to be in the area of education. I think that's where India is lacking currently. And if it can solve the education problem and educate the 70% of Indians who are below the age of 35, or I should say even re-educate them and retrain them in areas of critical thinking, that is what is needed in this new age of AI.
Interesting, Sabir. So, do you have confidence that the reforms and the Modi economic miracle, which you cannot deny the economic miracle over the past 10 years and the transformation, is not necessarily fit for purpose, and there needs to be more work done on structural reform? You mentioned education. What needs to be done specifically, and what progress, if any, is this present administration making on that front?
Well, I don't know what progress they're making, but they have to rethink education. The education, the way it exists currently, is completely broken. There is no way the workforce is ready for this new age of artificial intelligence with the current kind of education they have, which is primarily knowledge-based. So you've got to transform the education from a knowledge-based system into an inquiry-based system. What I mean is, very simply, teach people how to think on their own, because repetition or memorization are completely useless in this new economy. In the age of ChatGPT and AI and robotics, where machines will be producing a greater amount of GDP than humans, you have to transform your economy.
Yes.
And the only way to do that is to teach people how to think critically. Now, that opens up a whole Pandora's box on what is critical thinking. And, that's a very difficult question to answer, but it is really comes down to asking questions and solving problems. Just repeating something that somebody has done before is not the answer.
So, is there a mismatch? Is that why we are seeing the deep structural problems related to job creation? Is this why the younger generation of Indian job seekers, new graduates, are struggling to find high-quality, high-paying jobs in the Indian economy?
So there are two things. One is, I think, the economy needs to be opened even further. The so-called reforms that they started, ease of doing business in India, ease of setting up companies, ease of investing, is still not there. Despite all of the marketing hype, when you look at ground reality, the entire tax structure, the investments that flow into India, that has to be completely streamlined and made easier. Till there are structural reforms in the foreign direct investment in India, you will not have this. And the second thing is, the workforce is simply not ready for this new age of AI. So you've got to invest in education, which means you've got to educate all 200-300 million people who are uneducated or who are looking for a job today. and that is hard work. That
Yes.
you cannot describe that with just, marketing terms on a 10-minute show like this one. That
Yes.
requires, critical thinking where you go in and somehow educate the masses with a modern education, not an outdated education. The problem is, I went to the best schools on planet Earth, Caltech and Stanford, and I know that everything that I studied at these elite institutions is obsolete today. However, what I learned at these two places is the ability to think critically and learn on my own. And today, all the tools for learning are available on the internet. You've got YouTube, you've got Coursera, you've got all kinds of, videos that go around, whether it's on TikTok or on social media. You can learn how to think. You can learn how to solve problems. You can teach yourself AI and robotics and everything else. I think that is critical thinking.
Understood. Sabir, so until there is root and branch reform of the education system in India at all levels, and it is fit for purpose for this digital era of AI and transformation, are we going to continue to see India struggle in terms of trying to move up the economic value chain and move up into advanced manufacturing?
We are going to see India struggle because the workforce is simply not ready. And I think whether it's the state governments, it's the education bodies, it's the central government, they have to realize this, that, structural change you have to change the education for this new world. I mean, for example, today, I can write code, I can create a website in 30 minutes using AI. 10 years ago when I created Hotmail or whatever, 25 years ago, it would have required 6 months of a team of 5 or 6 people. All of that is being done in 30 minutes. And now the apps are getting so good, you can write full quality code, in just by prompting. Where does that leave the old, services industry? They have to, first of all, accept these changes and retrain their workforce to, meet these challenges head on and embrace all these modern tools that are being created using artificial intelligence.
But it doesn't sound as if TCS, Infosys, Wipro, Tech Mahindra are sitting still. Aren't they constantly reinventing how they do things and how they produce and manufacture their services? And aren't they upskilling their workforce accordingly?
I don't know what they're doing. I don't worry about TCS and Mahindra. I worry about the 300 million people who do not have a job today, and for them to be employed, they need to train themselves in areas of critical thinking. They need to embrace this new economy, and they need to start solving some real problems in India. And, the problems are not easy to solve. They take a long time. I mean, basics is education, followed by infrastructure. I mean, I may sound like a broken record, and I'm sure you've heard this story 10 years ago, but it's still the truth. You've got to solve the infrastructure problem. You've got to solve the education problem. You've got to solve the problem of a disparity in incomes between the rich and the poor. You've got to increase the average GDP. As long as those
deep structural problems go unaddressed, Sabir, are we going to continue to see the best and the brightest, the Indian middle class, the wealthiest Indian citizens leave the country, as they have been doing recently, and going to the UAE and other parts of the world?
Absolutely. But then the question you have to ask is, can all 300 million people go to the UAE or the US or Australia or the UK? Probably not. So reform has to happen within the country. And I'm saying it is possible. there has to be a will to do it. That is the hardest thing. If there isn't a will, if people come and, sugarcoat these things, make grand statements, but nothing happens, it's not a PR exercise.
Yes.
Real work needs to be done. And it's possible. I mean, it's possible to do using modern technology and modern tools.
The current administration seems to be expending a lot of time on the trade front, securing trade deals, and whether it's the GCC economic corridor, whether it's in Southeast Asia, whether it's a UK-India, EU-India, we don't know whether there's going to be a US-India trade deal. So is all of that a false narrative, Sabir, or at some point is that going to translate into investment and FDI, and is that going to benefit the Indian economy at some point structurally and really feed into the entire Bharat Viksit vision and realise that?
Listen, I don't know. I am not a soothsayer. I can't predict the future. But I think rather than trade deals and high-level PR exercises, people have to look at what happens at the grassroots level. And I'm not too concerned about the bigger companies, but the bigger companies don't generate employment. If you want true transformation, you've got to take care of the little guys, and lots of them. Think about creating 500,000 new companies, startups that are solving some real problems. Fund them, support them, make it easier for them to do business in the country. That is what will lead to a revolution. It has to be at the grassroots level. All these trade deals mean nothing. They are very high-level deals. They are deals meant for advanced economies. Well, let's be honest and true and face reality. India is pretending to be an advanced economy. It is not an advanced economy. I mean, I've said that, just a few weeks ago, that people in India were gloating that India is the 4th largest economy, soon to be the 3rd largest economy. I'm like, I don't see it. Look around you. Look around the infrastructure. Look at how many people don't have a job.
Let me challenge that. Don't we have to give the government credit and for the fact that domestically, the rural economy, we're hearing a lot about that, Tier 3, Tier 4, Tier 5 cities, economists come on this programme and tell me it's performing strongly. Inflation is under control. Inflation is coming down. It's more favourable. The RBI is on the right page. It's doing the right things. Isn't it moving in the right direction towards inclusivity when you consider what's happening at the rural level?
Listen, there are two ways of looking at a problem. Unfortunately, yes. I come from the school of innovation. I love disruption. If you tell me there is continuation, we are continuing to grow at a 4% or 5%, and you quote numbers from a spreadsheet, you lose me. I want to see real action on the ground. And being a critical thinker, I don't trust numbers. Numbers, you lose me in numbers because I will not argue with you on numbers. I will argue with you by looking at real change that I can see, I can feel, I can hear, and I can communicate. And that is not happening. So I will not ask you or challenge you on the numbers. The numbers can be whatever. I mean, the big economists are spewing out numbers. My question is, I don't see that translate to visible change in infrastructure, visible change in the job situation, visible change in true innovation coming out of India. Simple as that.
What do you make of the IT minister saying that India is and will produce its first semiconductor chip by December? Doesn't that illustrate a breakthrough moment for India moving up the value chain and advanced technology?
No, no, absolutely not. Listen, I started my career in the semiconductor industry. Semiconductor industry is 25, 30 years old. Why are we still taking pride that we will create our first chip? As if creating a first chip will lead to creating 100,000 or 100 million chips in the next 10 years. No. If you are creating an obsolete chip, that is once again just, something which is more a PR exercise. I think I would have been happier if the IT minister had said, we have convinced TSMC to bring their latest manufacturing line of chips into our country. And we will train a workforce of 10,000, kids, workers to work on this, and they will diligently work on it and start producing chips in the next 2 years.
Yes.
Saying something that we are producing our first chip. Yeah, what kind of a chip is it? Is it obsolete technology that they're, embracing? That is not. I mean, that to me is boring stuff.
So what's your take? How would you characterize where India's startup ecosystem is right now? Are they making the right moves? Is there anything? Can you point your finger or identify anybody in that startup ecosystem who is really making waves, who is really doing anything transformative to take India to the next level of advanced technology?
I wish I could say there is at least one company doing it. Unfortunately, there are zero. And I think it's a combination of will or lack of will, lack of support, lack of availability of venture capital, and most importantly, lack of a way of thinking. I mean, I went through the entire Indian education system, and then I came to the US and I went through Caltech and Stanford, and I can see the difference between the two. It's only one small difference. In the Indian system, kids are not encouraged or allowed to ask questions. The first step of innovation is being able to ask, can we do this differently?
Yes.
Is there a shorter way? Is there a better way? How if we do this or that or X and Y and Z? If you don't have that, if you create an army of kids who are taught not to ask any question but just to listen and learn,
yes,
you cannot have grassroots level innovation. And that is missing.
So what is it going to take, if I may ask you this, for India to come up with with a breakthrough on AI that will rival what we have seen with DeepSeek in China?
It needs an intellectual revolution. It needs to transform its entire system of education. Throw out what is existing, change it. Teach kids how to learn and and think critically from a very young age. That's what is needed. It's possible. It's possible in the age of AI. It's possible to mass educate 300-400 million people using AI tools, but there has to be a will to do it. You can't just sugarcoat this. You can't come on fancy shows like this and spew out fancy terms. No, it has to come at the grassroots level. Yes. India is behaving like an advanced economy. It isn't. I can tell you that. I'm a critical thinker. I think of solving problems. And I think the toughest problems are the ones that you solve at the grassroots level. If you solve those, scaling is easy.
Yes. Arguably, education and retooling the workforce for the AI era is a global challenge that global policymakers, not just in India, but everywhere in the world, needs to embark on and arguably have not even scratched the surface. Sabir, we'll leave it there, sir. Thank you very much indeed for joining me. Great conversation. Sabir Bhatia there, co-founder of Hotmail.com. Coming up, we'll discuss India's oil supply amid threats of secondary sanctions on buyers of Russian crude. That conversation after the break. Welcome back. India's oil purchases from Russia making the headlines, with the US now considering 100% sanctions on buyers of Russian oil. India's energy minister says the country is prepared.
My own view is the price of oil will come down. It will come down, madam, only because there is more oil available in the international market. Today, two major suppliers of crude are sanctioned. My first submission to you is, will those sanctions remain forever? You know whom I'm talking about. Iran next door and Venezuela. Number two, there is more oil coming on the global market from the Western Hemisphere. I mean countries like Brazil, Guyana, Canada, they're not even OPEC plus members. So my response, and I'm sorry I've given you such a long-winded response, is that I'm not worried at all. If something happens, we'll deal with it.
India's Petroleum Minister Hardeep Singh Puri there. We are back in 2 minutes. Welcome back. We are counting down to the market open in India. This is how we are shaping up. Let's give you a glimpse of futures. GIFT Nifty futures indicating a start in the region of 25,190. So that would represent a lift of about 80 points or so, considering where we left off yesterday at 25,111. Dollar rupee has just crossed 86. That's where we are standing right now. Right, the ban on US trading firm Jane Street hitting trading activity in India's weekly equity index options dropping by a third. National Stock Exchange, the world's busiest derivatives bourse, saw a sharp 36% drop in options premium turnover in just 2 weeks. Earlier this month, India's market regulator banned Jane Street on allegations of manipulating indexes through derivatives trades. Experts say the loss of such a big liquidity player is weighing heavily on the market. And checking back on the Asian markets, it is relatively positive, all things considered. We had record closes for the Nasdaq and the S&P yesterday. Strong US economic data, so that's listed sentiments over here, and especially TAIEX leading up by 1%, and that's down to index heavyweight TSMC reporting record quarterly earnings. Let's head out to Tokyo, where US Treasury Secretary Scott Bessent will meet Japanese Prime Minister Ishiba to talk trade. The backdrop, however, is not positive. After 7 rounds of talks, still no deal. And this weekend, there's political risk too. Elections could potentially throw Prime Minister Ishiba out of power. Kaori Njoji joins us with more. Kaori, great to see you. And help us understand why Sunday's upper house elections are more a referendum on the cost of living amongst Japanese as opposed to tariffs. We seem to have some problem with Kaori Njoji's connection. We'll try to re-engage with her later on in the programme and fix that. In the meantime, Japan and the European Union are reportedly launching a new 2+2 dialogue. According to the Nikkei, the meetings will involve both sides' trade, economic and industry representatives as Japan looks to participate in more EU projects and as they try to co-develop supply chains on critical minerals like rare earths. This could reduce their reliance on China. In the meantime, India is also trying to boost its rare earth supplies. The country has launched a $200 million mission to amp up domestic rare earth mining and processing. The plan aims to streamline local mining operations and forge new overseas partnerships to meet demand. Government is also set to auction patches of land in the state of Rajasthan that could hold significant rare earth reserves. And it is China's dominance in the sector that's pushing countries to explore new options. And JP Yong and Elaine Yu have been taking a closer look at the global rare earth space between China's dominance and emerging players. Elaine, let's start with you. Good morning.
Good morning. And yeah, when we talk about China's dominance, we're really talking about the entire supply chain. So China is home to about half of the world's reserves. It mines about 2/3 of global supply. And then China almost processes all of it. And that's thanks to decades of investments and industrial policy and also lax environmental rules. And Deng Xiaoping, the former Chinese leader, once said the Middle East has oil and China has rare earths. And also moving downstream, China has used its cheap and steady supply of these minerals to scale up production of rare earth magnets. And that's a critical component for so many things from EVs to wind turbines to defense system. And in recent years, though, China has significantly increased imports from Myanmar, particularly heavy rare earth metals and elements. And those are less abundant. But still, China does have a leverage over Myanmar because of this very dominance that JP can talk a bit more about later on. But China has also used this dominance globally, with countries trying to shake that dependence now. The U.S. Defense Department taking a direct stake in MP Materials, and the EU and Japan considering joint public-private partnerships to procure rare earths, according to Nikkei. And so we see governments stepping up. And of course, for China, many key players have long been state-owned. But it's not just the G7 countries. India, too, as you said, Sri. And I'm reminded of Modi's strong words at the BRICS summit earlier this month. He called for de-risking supply chains for critical minerals. And he said no country should weaponize these resources against others. So that's an interesting dynamic, JP.
Yeah, absolutely, Elaine. And again, it just is highlighted here in Southeast Asia with China's growing ties and influence on Myanmar, because Myanmar is now becoming a critical source of heavy rare earth. Now, mind you, there are 17 rare earths, and on the heavy spectrum, Myanmar specifically is a contributor, at least, or a supplier of terbium and dysprosium to China. Now, it's not because they have more of this. In fact, some studies have shown that China has significant resources and reserves of these two particular elements, but it's because of strict environmental standards in China that have now made them go to towards places like Myanmar to source this. But just to highlight why China has so much leverage over Myanmar and other countries, it's not just because China has most of the processing capacities in China as well. But if you take a look at the global reserves, actually, in terms of proven reserves of rare earth ores, actually, you'll notice here that China has about the same amount as the next 7 countries combined. The other thing that's also worth looking at here with regards to reserves is you'll notice that 5 out of the 10 countries with the highest rare earth oxide reserves happen to be Brazil, China, India, Russia, and South Africa, who happen to be the 5 big founding members of the BRICS summit. So if you're looking at this actually from a geopolitical standpoint, you'll notice that perhaps the global south has relatively more cards to play in the fight for rare earths. This brings us then back to India, Sri, because if you take a look at India, actually, you'll notice they have the 3rd largest number of rare earth oxide reserves. Now, we talked about India stepping up its production, actually, of rare earths right now. And it is a question that you can pose to India that only India can answer. The potential to become a bigger player in the rare earth space is there because of proven reserves. But the questions are you willing to spend to do that? And are you also willing to deal with the environmental consequences based on the lessons we've seen China and Myanmar have actually illustrated in recent years? That's a question only India can answer, because you have the card, you can play that card, but are you willing to deal with the possible consequences? That's only something only India can answer for itself.
And that is a very big limiting and constraining factor, JP. Thank you very much indeed for that. And Elaine, thank you. Right, let's return to Carrie and Joji in Tokyo, who is back with us. And Carrie, just help us understand how Sunday's elections are more a referendum on the cost of living as opposed to tariffs.
Yep. Well, poll after poll shows that the voter this time around in the upper house election wants one thing addressed, and this is the higher cost of living, and in particular, the higher cost of food. I mean, we did have CPI inflation numbers out this morning, but when you look at the price of rice, for example, it's come down a little bit off the peaks, but still double the price that people were paying a year ago. And these are the kind of bread and butter issues that are on the forefront of everyone's minds. And that means that when you look at the polls, hardly anyone is interested in the tariff negotiations and this trade war that President Trump has launched on the world. Having said that, however, the U.S. Treasury Secretary, Scott Bessent, is in town. He landed yesterday. He's in Tokyo. He's making a courtesy call to the Prime Minister Shigeru Ishiba, if that's the right word. I'm not so sure, as he heads out to the Osaka World Expo. And Akazawa-san, who's been the trade negotiator, shuttling back and forth 7 times, is going to be sitting in on those talks. But no one expects any kind of breakthrough here. The worry, I think, for corporate Japan is that if Ishiba and his coalition partners do poorly in Sunday's election, that means they do not hit the magic number of 50 seats. That means they will lose their majority not only in the upper house, in the lower house, and the upper house as well. So that means he's kind of a lame duck, and that begs the question of how long he can stay in power. So I think given those dynamics, I think no one is expecting an immediate breakthrough ahead of the tariff deadline, which is now moved, of course, to August 1st. But at the end of the day, it's not just automobiles that are going to suffer. I mean, a lot of other industries, heavy industry, aerospace, you name it, are going to be hit very hard come August 1st.
There's a lot at stake, a lot counting on Prime Minister Ishiba's political survival. It seems like a perfect storm of factors that he has to contend with. Carrie, thank you very much indeed for that. Carrie and Joji there in Tokyo. Now, we are counting down to the market open over in Mumbai. We're back in 2 minutes with the opening trades. Welcome back. Indian markets are in the pre-open phase, and the Nifty 50 looking as if it's going to hold the line at 25,000. Let's give you a dollar-rupee exchange rate, which is pivoting around the 86 threshold. Now, private lender Axis Bank reporting a surprise drop in Q1 profit as bad loans surged due to a one-time benchmarking review, while its net interest income rose slightly. Bank's asset quality weakened. Bad assets ballooned to 82 billion rupees, up from around 48 billion rupees in the prior quarter. Most of the new bad loans came from the bank's unsecured retail book, particularly credit overdrafts. The management expects the impact to ease in the coming quarters. Stock was down to 6%. And IT services exporter LTI Mindtree posting Q1 revenue slightly below estimates as growth in its key North American market slowed to the weakest pace in over a year. But the firm's CEO did remain optimistic about the future growth prospects and highlighted a $450 million deal with a global agribusiness firm. Stock is currently trading at 5,239, which is up by about 1%. In the meantime, Wipro earnings beating expectations, posting a 0.8% rise in revenue and 11% jump in profit as it saw improved US client spending, bucking the trend of downbeat earnings at its rivals. Company expects stable performance in the current quarter, easing investor concerns over persistent global uncertainty. And Reliance's core investment unit, Geo Financial Services, reporting a modest 4% rise in Q1 profits. Company says it scaled up operations and expanded distribution in the last quarter. Meanwhile, its JV with BlackRock, Geo BlackRock Asset Management, received regulatory approval this week to launch passive funds in the Indian market. And Reliance itself will be reporting earnings later today. Analysts are expecting healthy annual growth, helped by a one-time gain from the company's stake sale in Asian Paints. Reliance's oil to chemical, digital and retail segments are expected to boost operating income in the first quarter. However, we will be watching for any commentary around progress in their new energy ventures. Let's get more on the macro markets in India. Bring in Somnath Mukherjee, CIO and Senior Managing Partner at Ask Private Wealth. Somnath, great to have you on the programme. How are you approaching the Indian markets, given the balance of risk?
Good morning, and thanks for having me. From a markets perspective, I think if you look at the trifecta, i.e. valuations, earnings growth, and liquidity, valuations in India are stretched, but they have been stretched for some time, and there isn't too much of a Robinson Crusoe impact there. They have been stretched. Earnings growth, as some of the recent ones that you looked at just a bit while earlier, is slowing. In fact, has been slowing for the last couple of quarters. Expect that to remain modest right now as well, yes. This quarter, which is underway, as well as the next one. What is, however, interestingly poised is India's structural macros are at not just great shape, they are in shape that have been, for the longest time, termed as ideal or ideal markers. Inflation, current account, the whole slew of macro structural stability factors are in absolute ideal shape. So we have a bit of a dilemma out here as far as allocations are concerned, where we have great structural macros, very different from what we see in the US and maybe parts of emerging Asia as well. On the other hand, we do have a cyclical slowdown underway. On top of everything, liquidity.
Somnath, if you don't mind, can I just challenge you on the macro picture? Because you noted the slower earnings growth. At a corporate level, there seems to be some struggling, especially amongst the banks, which have been, let's face it, the stars in the market recently. We just talked about Axis Bank and the bad loan issues there. Then, on the other hand, early on this week, we got passenger vehicles and two-wheelers, which are such an important barometer of the broader economy. They declined in the quarter. that must tell you that all is not well in certain aspects of the Indian economy. Does that need to be, or to what degree does that have to be priced?
Sure. So there are two aspects to it. One, structural macros, inflation, fiscal deficit, that sort of stuff. Those are, as I said, in ideal shape. India's inflation mark came out earlier this week, the lowest in many quarters, in fact, lowest in several years, came in at 2.1%. Fiscal deficit, India's government has been on a very steady glide path to consolidating the fisc. That's in great shape. Current account, again, expected to be in that 1% of GDP mark this year as well, again in great shape. So as I said, these markers are not just great, they're close to being ideal. What we do have a problem with is a cyclical growth momentum. Cyclical growth momentum has been slow. Cyclically, the two primary drivers of growth in India for the last 4 or 5 years, certainly since COVID, i.e. government capex as well as elite consumption. So the consumption by the top 5 or 7% of the population, both of those have slowed down and are in a process of consolidation. Now, we need to find an alternative driver to drive growth, but it is a cyclical issue, not a structural one, and hence should get worked out in the next few quarters. On top of that, there is also the additional thing of really good system liquidity. Not just system liquidity as in the banking system, but extremely strong liquidity flows into capital markets. As we stand today, mutual funds are sitting on cash. Indian domestic mutual funds are sitting on cash positions that are higher than long-term averages by 200 basis points. And flows into capital markets remain, domestic flows, that is, remain as strong as they have ever been. In fact, systematic investment plans, which is the largest source of flows into the market, hit an all-time high of roughly $3 billion last month, which was higher than the previous all-time high, which was the previous month. So capital markets flows are very strong.
Thank you for that. So there are underpinnings that are supportive, but when you look at the IT at a sector level, how are you approaching IT services? How cautious do we have to be, notwithstanding the Wipro numbers, and we are seeing a near 3% lift in the stock price? Very different story when you consider Tech Mahindra and the peer group. So how are you approaching
AI, automation, large language programming across the world is having a significant impact on not just the amount of work that can be outsourced, which is what most of India's IT services companies are modeled on, but also the number of jobs, the number of software engineers that can be hired for doing the job, and which has been the single biggest underpinning of India's growth since 1991. So that's an area that we have to keep watching out for. I think there is a requirement for caution out there. Without getting into specific companies, I think the whole sector has to reimagine its models. The whole sector has to find out a new growth path for itself. Because what worked for the last 3 decades is clearly being disrupted in a major way.
Yes. Somnath, how closely are you watching the evolution of a US-India trade deal? We are hearing that we could see a mini deal, interim deal, early harvest soon, and we'll have to wait for a final deal that could eventuate and materialize perhaps in September, October. How closely is the market watching this, and to what degree does it matter for market confidence and higher pricing?
Enormously. I think a trade deal with the US is extremely important, and markets are watching it very carefully, not least because there is a certain amount of daily momentum thanks to what President Trump is doing almost on a daily basis. The US trade deal is not just important because India runs its largest trade surplus with the US, but India is also one of the very few countries that runs a very large services trade surplus with the US. So it's incredibly important that we get a deal in place. However, I think we have reasons to be more sanguine about the way the end game will play itself out. It looks like tariffs for everybody will go up en masse across the board. That's what it looks like. And India should be able to work out a deal that comparatively places it fairly okay compared to its main competitors. Not least because there is also the political angle to it. Despite some recent hiccups, US-India strategic relations are clearly on an upswing again structurally. There are multiple deals that are happening on the aerospace and defense side.
Yes.
A lot of people are probably not aware that India is very close to launching its heaviest ever satellite, which is a JV between India's ISRO and NASA. It's called NISAR, which is a $2 billion satellite that's going to get launched very soon. There's a whole lot of interesting stuff that's going on the strategic side, which gives us confidence that a deal will be on the table and not such a bad one.
Absolutely. Somnath, and let's just segue into defence that you raised there. It's really one of the beneficiaries of this indigenisation of manufacturing under the Modi administration. But from a market standpoint, do you think defence and small cap defence has run too fast, too hard, and are there valuation concerns here?
Yes, you could absolutely say that. Some of the smaller companies in the area have really run up very fast. Part of the reason is lack of supply. The listed market does not have too many options for investors to invest if they are choosing India's defense and aerospace as a theme. And most of the investable companies are, the larger ones at least, are state-owned. And they too have run up quite fast. But that's the nature of the beast on the listed side. Valuations typically tend to overshoot during times of a structural pivot in a specific theme, which is fine. I mean, investors need to be careful about both expectations as well as entry point averaging while they play the theme. But is defense a really fantastic new opportunity for Indian investors, both on the listed side as well as emerging extremely in a very large manner on the unlisted side? Yes. I think the global military spends are going up and India's will grow faster than the rest of the world.
Somnath, you mentioned liquidity, and with that in mind, do you think that the Jane Street effect has more or less washed out? Are the regulators now ahead of the curve, or are there other skeletons potentially that could fall out of the closet? And what are the market implications of all that?
No, I give a lot of credit to Indian regulators, both the primary regulator, SEBI, and RBI, which is the banking regulator. They are typically quite on the ball on matters of market stability, as well as macro stability as well. Is the impact of Jane Street fully washed out? I don't know. I think we should watch the numbers for the next few weeks to arrive at a conclusion. Is that something that will require market participants to reorient in terms of what they need to do? What are the kind of things that they need to position for? Yes, of course. I think there's this heavy discussions going on within most institutions in Mumbai about that.
Somnath, always a pleasure talking to you, sir. Thank you very much indeed for your insights on the macro and the markets in India. Somnath Mukherjee there from Ask Private Wealth. That's all the time that we have today on Inside India. Do keep watching CNBC. Dan Murphy is up next with Access Middle East. Have a good weekend when it does roll by.